Hey everyone, just had a super fun conversation with Sharunas and Alexandres, the co-founders of a Web3 boutique VC firm called Founderheads. We've gone full circle diving deeper into the must-haves and to-dos for startup founders, discussing the intricacies of venture capital, and evaluating the investment and fundraising strategies in the space. Just a quick disclaimer, nothing in this conversation should be considered an investment, tax, legal, or financial advice by either Sharunas and Alexandres or by Founderheads team. Thanks for tuning in, and let's jump into the video. Welcome to the show, guys.
Hi, Leo. Hi, everyone. Yeah, pleasure to be here.
Hey, thanks for having us.
Of course. Can you share your background with our listeners? You both have interesting and relevant experiences with startups and are now leading a Web3 VC fund together. How did you end up here?
Alex, you want to go first? You're younger than me, so you have
Sure.
less things to share.
So I've explored crypto or Bitcoin rather since the early days of 2014, I think. Ended up buying, selling, and not making any meaningful amounts of money, but ended up coming back to it in 2017, and as I'm sure most people back then did. Ended up working in a few projects. As a matter of fact, that's where I met Sharunas, and he used to be my direct supervisor back in the day. We ended up working together for a little bit, building a great company that's super successful till this day called Car Vertical. I ended up moving forward and trying to co-found and join many different startups, most of which failed, but I've ended up just gaining more and more experience, right? That's the part of the startup world. And then in 2021, I co-founded a project called Block Wallet, which is a Web3 a non-custodian wallet. Back in the day, it was called Blank Wallet with a focus of privacy. And the story goes that I ended up seeing a lot of investors join my cap table and promised me a lot of sort of wonderful things and portraying a picture of a magical wonderland when in reality there was none of that and there were no sort of deliverables on those promises. So that ended up upsetting me and inspiring me at the same time to create a VC company that's sort of a different in a sense of value add and more, right? So I'm sure Sharunas will expand on those thoughts, but that's very quickly my background.
Yeah, sure. So a couple of things. I have maybe a bit more traditional career. Started working as whatever project manager in one company. Then I worked for a Barclays Bank as a digital project manager. Then I worked in the digital bank. But the thing what led me to crypto, I think in a nutshell, is that I when I started work at Barclays Bank was one of the few banks, incumbent banks, that actually started looking at the digital agenda. They launched their mobile payments app, especially in Africa. It was super successful. They actually established like a innovation department within Barclays Bank. They were one of the first to collaborate with some accelerators to invite people to create in fintech. Fintech back 10 years back was pretty innovative term. Nobody knew what it meant and so on. So I kind of saw where like traditional payment and banking systems trying to be upgraded to be more innovative, more technologies to be introduced. So I had the pleasure of working there for maybe 4 or 5 years, experienced that. Then went like a one step up and went to work for N26, which is a digital bank based out of Germany. So I had to go to Berlin and to lead 18 of European markets of N26. So it was like a step change in how payments, how banking could be done. Still, I was not entirely satisfied, because what I like keep saying is that I think all these digital banks and apps are like a lipstick on a pig. It's obviously very nice, interface, user experience. It's still much better than the regular banking, but still all the backend systems, legacy systems are the same. Some of them even all of them using like Swift payment system, some even, I don't know, maybe using frameworks that been popular in the 90s and so on. So when I kind of came about crypto, I think back in 2016, I really saw that crypto is not like a marginal improvement on another banking or payment system, but it's actually a frog leap towards the innovation that I think everyone is striving for. So that's why I was fascinated by crypto, and I thought that it would be really good to kind of understand how it works and what it does. So this is when I joined a project as an advisor, just to kind of have a opportunity to touch it. And this is where I met Alex, and yeah, I had a wonderful chance to experience the bull market, the ICO craze of 2017 and 18. But then when the bear market came, I kind of lost interest in crypto, unfortunately, and kind of left to do other things, whilst Alex stayed in crypto and kept pushing forward. And then yeah, as Alex said, we had a lot of bad experiences with different investors, and I used to be a founder myself about 5, 6, 7 years ago. So we kind of came together and said, oh, we should kind of create something different that it would be founder focused and would add value. So yeah, we didn't have like this big plan of creating a VC right away. It just came naturally. Basically, it was Alex and Sharuna's enterprises that we were just helping our friends and people from our network, and all our marketing we've done was just word of mouth. So yeah, it was a fun beginning, and then obviously the rest is history. So I bet we're gonna dive deeper into that.
I really like the name Founderheads. And of course, if the fund is focused on founders, it's really nice to have that catchy keyword in there. Is there a story of how the name came about?
Yeah, well, obviously we kind of had a lot of help, like building brand and coming up with the name. We went through a lot of kind of exercises, brainstorming exercises. But basically, it boiled down that when you do the brainstorming and you try to kind of put all the keywords that are most important for your fund, founders, what was the key buzzword, So we kind of decided, and it just naturally came that the name has to be something with founders. And there are a lot of like other kind of names that have this connotation of heads in the end. So kind of, I don't know, just kind of glued together naturally. I think we liked it immediately, and it was like a winner. But basically, it was just like the most precise representation on who we are ourselves. So both the founders, and plus we are like building towards and with other founders. So just kind of, I don't know, it just felt like it's the best fit for us. I don't know, Alex, what do you think?
Yeah, I remember comparing it to petrol heads, right? So, like Sharuna said, we're founders ourselves, and we're super excited about meeting other founders and investing into them. So we thought that's a great representation of of our mission.
Now, getting more into the crypto space as a whole, do you believe Web3 is undergoing the same adaptation process as the internet did in the 90s and 2000s? And do you notice any significant differences between this new chapter of the internet and how it majorly transformed our lives compared to crypto and what it can do in the near future?
Yeah, actually, I just finished. I was on holidays and finished reading book "Read, Write, Own" by Chris Dixon from A16Z, who's talking about the new generation of internet. Really great book. Everyone should read it. I promise to give a copy to every person of our team as well. I think it's a must read. I think he really nicely puts it together. How internet transformed, and when we call it Web3, it's for a reason. Because we had a first wave of internet. Web 1 was actually just websites where you could read information, basically yellow pages online, right? Then the second wave of the internet, the Web 2, was where you could write something. So actually, we could post on Facebook, on Twitter, on Instagram, or that means or on YouTube, actually contributing content, right? And it was like a very interesting era of the internet. Everyone was very excited, but unfortunately, what happened that 80 or 90% of all the major traffic is now in the hands of like top 4, top 5 companies, being Facebook, Amazon, Google and so on. So basically, what Web3 and blockchain is promising is actually liberation from that monopoly, right? So basically, I don't believe it's gonna change the internet as a whole or our lives. I think it's just gonna make the internet better, right? That's how I understand Web3. So basically, instead of like I don't know, everyone contributing on Instagram, on YouTube, and actually getting 1% of all the profits that the companies are making, even though you are creator of the content there, it should be democratized, it should be decentralized, right? And it should be permissionless, and everyone should share the piece of pie. We know all the stories, like, you know, how I think only 1% of all the music creators on Spotify are making more than $50,000 a year, right? So basically only 1% of all the creators there can actually basically like make a salary to survive, right? Which is not fair. So I think YouTube being the most generous, but they share 45% of all the revenues with their creators. So I think that's one of the biggest kind of promises of Web3 and then the next era of the internet. And then obviously we have all the side of the payments and the banking systems, right? So we have you know, currencies like dollar that depreciated 98% over the course of 100 years. You know, where there were more money printed in the last year than it was in the previous 100 years, and stuff like that. So I think crypto being decentralized, you know, being global, is actually making a promise of like making payments, making banking in a new way that's actually not I don't know, managed by a handful of people that decide when to change supply or I don't know, do different things with the monetary system. So yeah, a few thoughts from my side. So yeah.
Yeah. You know, I'd like to think about it from a practical point of view, right? It's there have been a lot of ideas floating around. What's super interesting to see is that um, blockchain or DeFi or you know, however you think about it, really gained or experienced the revolution in, I think, 2021, right? Back in the days of 2017, like real world assets and or you know, just sort of a practical application of crypto was only a, you know, hypothetical approach. Back in the day, there were no sort of on-chain applications, right? You would still use a centralized exchange, and that was pretty much it. Whereas, you know, Uniswap coming out in 2020 changed things and started this just on-chain revolution, right? So with that, it's only been 3 years, but I see it, you know, evolving at a much greater pace than internet did, right? It seems like we're already, you know, in the VC sort of world, we happen to see a lot of companies pitching to us and trying to build many different things, right? So it's super interesting to see that the ideas back in the 2017 era are now becoming sort of practical, right? And we see this many Lego puzzles, right, popping left and right of like, you know, decentralized identity, right? That was previously maybe more of a, you know, also idea, and there was companies trying to do that, right? But we now see a lot of, you know, a lot more of practical developments there, right? Same with real world assets, right? There were only ideas or hypotheses back then. Now we see startups selling tokenized sneakers, tokenized, you know, collection cards, and things like that, right? So what's clear about blockchain as a whole is this sort of, you know, asset ownership as a benefit, right? Better liquidity and things like that. So it's super. It's very very interesting to see so many companies capturing the benefits of that and building on those benefits. So yeah, I mean, I think. I watched the Michael Saylor video back a few days ago, and he's saying, you know, try taking $100,000 worth of cash in an airport, right? Or the same with gold, right? You can't do that. You're going to get stopped by TSA and whatever. So I think the real benefit of crypto in the majority side is this sort of sovereignty, the you know, asset ownership, and you know, having custody of your own asset.
No, that's a really good comparison. And crypto is definitely moving at a rapid scale with more and more ideas becoming reality. And there are more and more verticals emerging as well. As fund managers, are you looking into anything special right now? Are there any categories of Web3 that you continuously keep an eye on? Like we mentioned, a few sectors like music industry, digital identities, decentralized identities, and so on. So is there anything that you continuously looking for more innovation, looking for more solutions there?
Whenever we have the opportunity to pitch ourselves to startups, we always say that we are generalistic investors, and I like to say that as long as there is a problem that we feel is real and the solution that we also feel is a great solution to that problem, we'd like to invest. That's pretty much our take on it, right? We try not to limit ourselves to particular verticals, as we've made a lot of mistakes passing projects that we didn't believe in the verticals ended up being not true and growing afterwards, right? But to answer your question, I'm particularly more interested in the infrastructure DeFi side of things, right? Networks and things like that. I think if you look on the usability side of crypto, I still think that the best use case is sort of building these Lego blocks to service crypto as a whole, right? Not necessarily. Maybe Sharunas will take part of like GameFi, right? Which is what we're trying to build exposure to and get excited about, right? But I think the best, sort of going back to my thought, that like the most practical applications or the most successful applications so far have still been sort of playing within the ecosystem, right? Which is like exchanges, right? Chain bridges, dedicated chains, and things like that. So my focus is around that side of crypto.
Yeah, as Alex said, we're journalistic investor. We don't have any kind of preferences. We're not like married to a particular vertical or trend. We can have our own personal likes or dislikes or focus areas, and stuff like that. But basically, we always try to just see and find good founders that can build something interesting and that would have an impact on the world and so on. So. We have invested. Basically, we're still in the kind of testing phase, right, of crypto. There's a new trendy vertical every other month or something like that. Yesterday I was excited like about, I don't know, GameFi, today about LSDFi, tomorrow about real world assets. There's like endless trends. It's very difficult to keep up. I think we just try to get exposure to most of it, right? It's impossible to get exposure to all of it. I think we always keep focusing on the founders, and if they're building in DeFi and we like the founders and solving problem, we're gonna end up investing. The same if they're gonna do in GameFi or real world assets or something like that. And our portfolio consists of basically everything from like cybersecurity, infrastructure, GameFi, MEV, social tokens, music startups, and anything. So yeah, no particular trend. We just come along as the trends go, and just try to focus on strong builders.
Yeah, it's like building on top of your answers. Crypto is in a very early stage, and a lot of infrastructure still needs to be built out. So we have not reached yet the end of knowing whether something is definitely needed or if it works in the ecosystem. And ultimately, there is still so much space to take risks and make bets on projects, right? And in venture capital due diligence, a variety of checkpoints need to take place for the investment to be reasonable, short term and long term. And one of them, of course, is the team, especially the founders, what you usually focus on. So, what are the checkpoints from your side for these founders that are absolute must-haves?
Sometimes it's difficult to tell. It's just a gut feeling, whether you click or don't click with the founders. There is. We invested in founders that have experience. We invested in founders that don't have previous experience, and so on. It's also about team composition and so on. I think one of the traits that we get excited with Alex about founders is if founders are hungry. If founders are hungry, they want to go and rule the world, and they're motivated. That's the most important part, right? You can have the most experienced founder, but if she or he not hungry, they're not gonna do well. They're gonna treat building the company like having a 9 to 5 job, and that's gonna be a problem, right? But looking more like kind of theoretically, obviously, if the people building the company have experience, maybe they proved themselves, maybe they have a couple of exits already. It always helps. It kind of gives you a bit more assurance. It's not a guarantee. It's not a prerequisite, right? But it could indicate that these people know what they're doing. They've done it before. Maybe they already made a lot of mistakes. They're not gonna repeat themselves, right? Then whenever I talk, I think it's people don't talk enough about the composition of the team. It's not about one person. Usually, we like to glorify these single founders like Elon Musk, Mark Zuckerberg, and so on. And we usually forget the founder number 2, number 3, or something like that. So I think for us, at least for me, it's very important to have a right team composition. And I read this very good concept of 3 H's, which is every team has to have a hipster, hacker, and hustler. So Hipster, the one is doing the product, Hustler is doing the business development, talking to investor, and Hacker obviously building the product and building the tech. So it's excellent when you have as full team as possible. It's a very rare case. Usually what we see is like a team that's super strong in technology. They lack business development and sales. And on the flip side, sometimes you see very good salespeople, very good marketing people, but maybe the product lacks some substance. Obviously, when you have the match of both, it's a match made in heaven. And usually this is when we have these very big successful companies and products and so on. So yeah, so I think this would be and yeah, we like also humble people, humble, modest. We don't like especially founders sometimes turn like very I like, how to say, I don't want to insult anyone, but especially if they feel that everyone wants them, they become they start to show their ego and like kind of disrespectful to investor and like, they are like the princess everyone wants. So we try to avoid founders like that. We like just humble, simple people like ourselves, because we're going to be working with them for the next, whatever, 5-7 years. So this is what we focus on.
Maybe to add, to double down, it's definitely the vibe that we're getting, right? Sometimes, I mean, if we get along quite nicely, it's just the gut feeling that tells us, okay, he's the right person behind that, right? The other few traits that I have in mind, I think, is honesty is a great one, right? I think that sort of sets apart and I guess when you're raising capital, you're trying to sell yourself, right? But so many of them are afraid of saying the wrong thing, and that shows, right? And we can't build a trust bridge between that when I see that there's maybe not so of direct communication going around. Yeah, the other ones, I think it always helps if you demonstrate knowledge in crypto and in tech and in blockchain, right? And you know what you're talking about, and you're just generally a sharp tool in the shed, right? I think that's that helps, adds those bonus points. But at the end of the day, it sort of it boils down to how hungry you are, how motivated you are, and are you going to pull this forward when the times get rough, right? Ultimately that's what it boils down to, right? How you act in tough times, and if you manage to pivot and things like that. So yeah, that's what we get excited about.
Right. And actually, I'm curious, looking at your experience, especially building on top of what Sharuna said with 3H, what was it? Hustlers, hackers, and I think one more. What would be the
Hipster.
number one? Yeah, hipsters. What would be the number one identification for both of you?
It's very difficult to tell. I would still go, I guess, after the hacker. Because I still believe that the biggest companies, the strongest, at least crypto projects, are built by like very strong technical people. Crypto in general is very technical. Blockchain is very technical, right? That's why a lot of people don't understand it. That's why it's still hackers built for hackers. That's why we still lack user experience and many other things. So especially in blockchain space, I would still go for the hacker if I would have to choose. But it's a very very close call. Alex, what
Alex?
about you?
So I'll say hustler, right? I think
Nice.
ultimately boils down to, if you are a hustler, you are going to find a hacker, right? If you really want to.
Oh, nice.
Yeah, I have a saying that, uh, those that search shall find, right? So it's only a matter
Mm.
of time. And hustlers are there to get it. So I believe in hustlers.
Looking at your portfolio companies from the founder's perspective, who instantly comes to mind as these innovative and professional, like brilliant founders that completely swayed you away?
I think one that definitely stands out is Elon from ChangeGPT. That ended up being one of our earlier investments. And what's super interesting about it is that, number one, we invested in him as a personality, right? And ChangeGPT, back in the day when they were raising it, it was a different product, right? Although it was AI focused, but now they're known as a launchpad, right? And that ended up sort of being a pivot after he raised. So I think he encompasses this sort of a real hustler personality, right? That ended up sort of pivoting, finding a product market fit for himself, and now these days, ChangeGPT is doing great as a launchpad, one of the better ones, and launching many great projects, right? So yeah, that's what comes to my mind first, and there are a few others that embody the same sort of spirit, right? Loudest from Insert Finance, right? He had a one product launched that ended up not satisfying him, and although it was still a product market fit, he ended up now pivoting and working on another sort of idea for the same brand. But it's always great to see hungry founders that are relentless and not giving up, and are not satisfied with contemplacy, and sort of just want to get most out of life. So that's what we really like.
Nothing to add. I think we have a great portfolio of companies. With all, they all have their ups and downs. They all have their pros and cons. And so on. There's never an ideal team, I guess. I think looking at the maybe common trait of some of the founders that Alex mentioned, and some of the founders in our portfolio, I think it's important that founders are not afraid to pivot, and it's basically there are no product that founders launch and it's a major success, right? It's basically you have to keep launching small pivots before you kind of hit the spot, and just a matter of if you have enough runway and money in order to check those. It's like Thomas Edison said, it's not I didn't fail 10,000 times, I just find out 10,000 ways that don't work, right? So I think that's one of the major things in building a company, whether in blockchain or otherwise. So it's like it basically maybe we hear about Facebook was just a hit from day one, and maybe other things, but usually it's like a few pivots that you need to do, a few ways that you learn that don't work before you kind of hit jackpot. So I think we will like the founders in our portfolio that keep going, changing, not afraid to make bold decisions, and so on. So yeah.
Yeah, you especially like you mentioned before, you usually get um one side of the two worlds. You either get like the founders that are very strong, have a lot of experience, but the product might, lack some specific angles, for example, marketing, business development, or, even like from the technical side, that the infrastructure and the knowledge to build it out. And then on the other side, you have a very strong and promising project with a team that are maybe not the best fit, or just there is no click between, an investor and the team. So what would be your ultimate preference there?
I would choose a founder or project in split second. It's like 100%. It's I think people are building companies, and not companies building people. We have this moral dilemma sometimes when we find really good project that everyone wants, but we don't like the founders. We rejected most of them. Some of them maybe we took a leap of faith and we thought, okay, maybe we'll get along, this and that. Usually, it still doesn't work. So we always prioritize founders over projects and companies and so on. I think good people will kind of find a way. So.
I can second that 100%. Great people can pivot bad projects, right? So again, that's why we want to back people. Yeah, simple as that. Not more to add. I think Shona's was important.
Yeah, I agree. I'm always looking from the team perspective, like primarily as well. But then for the projects, right? The one big hurdle is connecting with VCs and building relationships, which is super expensive, super time consuming. And even if the founders are perfectly prepared for a pitch, these lack of warm connections and misunderstanding of the markets or even insufficient traction can become massive stumbles in receiving fundraising. Is there any advice you can give to startup founders on how to prepare maybe more effectively and attack these sore spots before begin hurting, throughout fundraising or even afterwards?
Whenever we come across companies in super early stage, I'd like to give an example or tell us the story about snowball effect, right? I think it's very real with investors in the space. Whereas it's very hard to get the first investor on board, and the more investors on board you have, the easier it is to raise additional capital, right? Your deck starts to get shared amongst investors. If you manage to onboard a great name, it helps to sort of validate your startup to other investors and so on, right? So taking that story, I would say just keep building, right? It's sure sometimes it can be hard, sometimes it may take long, but it's traction and sort of any statistics or having a real product beats a lot more many other aspects out there.
I totally agree with what Alex said. Obviously, again, it's better to have very good product and idea than have very good pitch and so on. But still, if you want to maximize your odds of raising capital, you just have to do a lot of homework. We feel a lot of people are come unprepared. They put together whatever deck. They never pitched it before. They have typos in the deck and insufficient information. They get stuck with like very simple questions. Sometimes you ask a bit deeper about tokenomics. They cannot answer. You see that somebody else made the tokenomics for them. All these kind of things. So basically, I think the founders need to be prepared. They have to like really understand what they're pitching, the information, how it hangs together. They have to train to pitch, get into the flow. Just simulate the pitch and so on. Plus, you obviously train that by doing, so maybe you can start with the smaller angel investors, smaller funds, train, see what works, what doesn't. Maybe you refine your pitch and then go for the bigger boys and so on. But other than that, it's not rocket science, it's basically, we always get asked, how to reach investors, how to do this and that. Basically, just you have Google. You just say best VCs in crypto or whatever, or do that on Twitter. Just follow some groups that actually post. Last week there were like 10 pitches, 10 raises, and these were the investors that invested. Just email them, LinkedIn them, tweet them, and so on, and you're definitely gonna get into the door. It's also a numbers game. If you're gonna reach out to 100 investors, you're gonna have a call with 5 of them. One of them will kind of invest, and then that one will introduce the 3, and this is how you're gonna get going. For some reason, people they mystify this whole kind of fundraising exercise. It's actually just hard work. It's just basically doing a lot of homework and really grinding and hustling. That's all there is. Obviously, if you're like this hot project that everyone wants, it's easier. If it's a less hotter project, it might be more difficult. But basically, there's no rocket science. It's just like kind of making a list of 100 investors, reaching out. If you can find warm intros, please do. If not, go directly, get on the calls, be prepared, polish your materials, and you're definitely gonna end up with the investment.
Founders, if you're listening, go to founderheads.com and submit your project. We'd love to talk.
Yeah, we have the whole list of to-dos. So now they can get to work. Looking a bit deeper into especially like fundraising strategies, there are usually two ways crypto startups approach fundraising. One is to go the blockchain route and offer tokens to investors, and that usually happens in the forms of SAFs. And this is a much more liquid approach than equity deals, and they usually equity deals do dominate the financial traditional finance world, right? But some crypto projects still go the old school route and do equity to investors. As a VC, do you see a bigger upside for either equity or token deals? Do you think projects should be flexible in offering both? Just what are the kind of comments for the merit of both approaches?
Commenting historically a little bit on this, I think in 2021 there was a great deal of interest for token investments only, and historically going through that, I think a good number of VCs learned their lesson in investing in bad apples, whereas maybe they ended up being a little bit of malicious sort of players in the space and things like that, right? Not using the funds properly and so on. So naturally, the investment landscape has evolved to where majority of the deals that we see right now are basically a combination of both, equity plus token warrant, which gives an investor a peace of mind that and it's sort of a very smart way, right? So you raise for equity and you say, if I'm ever going to have a token, my investors are guaranteed a token, right? But you're not forced to launch a token. But it's peace of mind for an investor to make sure that he gets any sort of upside possible. He gets the play of equity, which guarantees him that there are sort of reports and accountability and things like that, right? Of course, as far as tokens go, there's definitely bigger interest from investors towards the token, right? Namely, being honest here, sure, the token has a better liquidity in the markets, right? There's probably better upside. I guess more interestingly, it's even it feels like it's more beneficial for the company itself as well, in terms of go-to-market strategies and things like that. We've seen a countless number of companies now pursuing the airdrop strategy, right, which is so very lately very popular, of like promising your users a token airdrop, which you can only do if you are going to have a token, right? So yeah, I guess ultimately the only sort of recommendation from my side is not to do a token launch if there is no point in having a token utility, or there is no token utility, right? For instance, service businesses are rather more of a equity side of things, right? If you're building a dashboard or something.
I mean, Alex is spot on. Just to make a summary of what Alex said, I think first of all, you need to check which mechanism or vehicle fits your company. As Alex said, if it's a tool or service business, there's no token, so you only can raise equity, right? If it's a decentralized crypto project where basically the founding team is gonna pull themselves apart, and will leave it functioning on its own, like, I don't know, Ethereum we have, or Bitcoin or something like that, there's no point of owning an equity because there's no equity owning the Bitcoin, right? So this is the point where I think token only is most valid. And then there is this kind of hybrid that was born a couple of years back, maybe only equity plus token warrant, right? So again, it depends if it fits best your company and so on and so on. But as Alex said, I think we're leaning towards token because this is the whole excitement about crypto industry is tokens, right? This is a currency that used to be that should be used for everyone, for investors, for airdrops, for marketing, for incentives, for users, for everything, right? Equity is usually, this kind of somewhere in the background, there's a handful of people holding and making decisions and so on and so on. And I think token is what makes crypto exciting. I think what makes these cycles go so fast and so on, and helps fuel the innovation. So I would definitely go for tokens in the long future. And I think that's what crypto is all about.
Going back to Founderheads, you launched in 2021, which was the middle of a bull run. did the favorable market conditions prompt you to go deeper in the industry, and like were there other incentives to launch the fund at exactly that moment?
It's a good question. Actually, when I look back and think about it, actually, majority of our investments were done during bear market. So,
Hmm.
we kind of the 2021, the rage of bull market, we just kind of started scratching the surface, helping some handful of people from our network, and basically done like very little investment or close to none. And I think basically when bull market ended and was bear market, it was more quiet. There was no noise. This is when me and Alex we said, yeah, we should do it. We kind of we played around with it. I think we're good at it. We can help people. We want to do it, and actually all beer market we were like it was the best time for us. Everyone just keeps asking, oh, the same question. Oh, you were born almost in like kind of beer market. Everyone is paused with their investments and so on. For us, actually, it was the opposite. It was the golden time. And simple explanation being that during the bull market, there's so much money that it's very difficult to get into good projects. It's very difficult. It's actually this beauty contest that, there all the rounds are oversubscribed, and the founders are kind of making this beauty contest saying, oh, I like you, I don't like you, please dance, then I'll give you allocation, all the kind of stuff. And then bear market was like more quiet. We could talk to like really good projects. We could co-invest with like top names in the industry. So it was super, super exciting. And it's getting more tough now when we are on the cusp of another bull market and so on. So yeah, I think it was super good time to start the fund actually, and just right after the bull market.
Whenever we invest, we try to have an 18-month outlook on things. So sort of that means investing in a bull market puts you pretty much at on a cycle of a bear market, right? Which is why the investments that we've made in peak of the market ended up maybe being not so fruitful because they ended up launching afterwards, right? And so a bear market is great also because it filters some of the builders, right? If if it's easy to get money in a bull market, right? It's not so easy to get money in the bear market. So if you are just after a quick buck or launching a somewhat weird project, it's much harder for you to do that in the beer market. So it's great for us to see a lot more of dedicated and serious builders. If anything, it's sort of similar to what Warren Buffett said, right? Be fearful when others are greedy and be greedy when others are fearful. So we're trying to apply that to our investments as well. And if anything, I think, for us, the best time to invest was yesterday, and the second best time to invest is today. And that's what we're doing, trying to ramp up our number of investments these days with having an 18-month investment outlook on that.
Looking from backwards from 2021, like if you launch Founderheads in 2024 instead of 2021, is there anything you would do differently? This could be, in terms of partnerships or due diligence or like inner workings of the company. Like, do you have any kind of thoughts that pop up that, oh, we should have maybe ramped it up from a different angle?
I'm quite happy with the way we started and did everything. I think a majority of our lessons were in um, uh, making bad investments, or so learning from maybe we should have invested in this founder, maybe we should have done this a little bit different, and so on, right? So I would say again, it's probably trying to time the market is a good advice. So if I started today, I would probably try to deploy majority of my capital as quickly as possible, right? Given the fact that if you invest into great startups, you're working with 12-month lockup, you're working with them launching a token 6 months from now, a year from now. So again, that sort of stretches your timeline. Not being afraid to deploy capital is a good one. I think we maybe were a little bit cautious back in the day and wanted to learn and take our time, which in retrospect was also good. But I think if you are starting now, what a lot of other investors are working with the hypothesis that this may be our sort of last bull run before mass adoption and sort of market settling down, right? So in this case, if you're starting now, I would say have a lot of faith in what you're doing, and just push the pedal to the metal, right?
I think we did a lot of things right, and I was thinking, and the only thing that I thought even before Alex said, I wanted to say that I would have been more aggressive, so I think we missed maybe on some good deals just because we wanted to be a bit more cautious, and we're like we're afraid to run out of dry powder, before the party starts, all the kind of stuff. I think it's better to make couple of bad calls or bad investments or worse investments, right? Rather than miss one like really good one. And I think that's one of the maybe mistakes we made. Maybe I would have deployed a bit more aggressive and made more mistakes, but maybe find another gem, in the bucket. So that's the only thing that I think I would have changed. I mean, from bigger things, smaller things, you can always improve, how you position yourself, this and that, I don't know, more connections, more conferences attended, all these kind of things. But I don't think they would have made a radical change. But being more aggressive, maybe they would have. So, yeah.
It was super fun talking to you guys. Thank you both for coming on to the show. It's great having you here and learning what you've been doing in the crypto space and venture capital space. Please share to our listeners how they can follow your work and investment journey further.
Leo, thanks for having us. So founderheads.com. Again, that's founderheads.com. Twitter, LinkedIn, anywhere you want. Find us on socials. But I think it's best if you go to founderheads.com and apply with your project if you're building, or just follow us on socials.
Yeah, thank you, guys.
Yeah, same. Thanks, Leo. Thanks for having me.